This market was still bullish, but something about this top didn't feel right. Price pushed above the previous high, barely, and then it came straight back inside. That caught my attention, because sometimes the way a market fails tells you more than the way it moves. And this time, I decided to take the short. Let me take you back to where this trade actually started. This was the 1-hour chart, and if you looked at the bigger picture at the time, the market was still in a bullish phase. It wasn't some obvious downtrend where taking a short would feel natural. The structure had been moving upward for quite a while. But something had changed. The bullish move was losing some of its strength. The slope wasn't as aggressive anymore. And more importantly, price was approaching an area that had already stopped the market before, the previous high. So I wasn't looking at this and thinking, the market is bullish, so I'm going long. I was thinking, okay, let's see what happens when price gets back here. And then price got there. It pushed through the previous high, but only slightly. There was no convincing continuation, no strong breakout that made me think, okay, this market is definitely going higher. Instead, price came back inside, and that part mattered to me, because breaking a level isn't enough. I want to see what price does after the break. Does it accept the new territory, or does it immediately reject it? Here it came back in, and then something even more interesting started happening. Price started moving down, then pulled back, then moved down again, and continued building what looked like a 5-wave move against the previous bullish direction. 1, 2, 3, 4, 5. Now, I wasn't thinking 5 waves means I'm guaranteed a reversal. That's not how I use it. For me, it was more of a clue. The market had just failed to properly break the previous high, came back inside, and then produced 5 moves in the opposite direction. That combination was much more interesting than any one signal by itself. And then came the part I really liked. After that 5th move, price didn't slowly crawl back. It snapped back with momentum, straight back toward the original bullish direction. This is where the trade started becoming interesting, because the market was still technically bullish, but the behavior around that previous high was changing. We had a small breakout, a rejection back inside, 5 waves down, and then a strong reaction back up. So I marked the zone where I wanted to see price return. I didn't want to chase the move. I didn't want to enter just because the chart looked good. I wanted price to come back to my area, and if it gave me the conditions I was looking for, I'd take the short. Was it risky? Yeah. I wasn't going to pretend otherwise. I was considering a reversal setup while the larger structure was still, at least partially, bullish. So this wasn't one of those trades where everything lined up perfectly. But there was one thing that made the risk interesting, the risk to reward. If I was wrong, the loss was relatively contained. But if I was right, there was a lot of room for the market to move. So I waited, and eventually, price came back to my zone. This was the moment. I didn't need to predict what would happen next. I just needed to decide whether the setup was good enough for the risk I was taking. And for me, it was. So I took the short. At that point, the plan was simple. The stop was defined. The target was defined. And now, I had to let the market do its part. And this is where trading gets boring. Really boring. Because once you're in a position, there's not much you can do. You can stare at the chart. You can move your mouse around. You can convince yourself that every candle means something. Or you can let the setup play out. In this case, I didn't have to wait very long. Less than 24 hours after entering, price reached my target. And the interesting part? It didn't just randomly pass through the area. It reacted from almost exactly where I had placed my TP. And after that, it continued lower. Looking back at the whole move, this is the part that makes the setup interesting to me. The 5-wave move itself wasn't the reason I took the trade. It was the story around it. Price had reached an important previous high. It pushed above it, but couldn't stay there. It came back inside. Then we got those 5 waves pushing lower, and after that, price reacted strongly. To me, that showed that something was changing in the way the market was behaving. There was a lot of movement inside those waves. A lot of the orders sitting along that path had already been dealt with. So when price finally turned, there wasn't as much resistance in its way. That's one reason the reaction was so aggressive. And that's also why I didn't look at the 5 waves as a magic reversal signal. They were just one piece of evidence inside a much bigger picture. Now here's where I have to separate the trade from what happened afterward. Price actually went considerably lower after my TP. And yes, technically, I could have made more. But that wasn't my trade anymore. My target was reached. I got what I came for. And eventually, the market stopped pushing lower. It couldn't break the important previous low that would have been needed to continue the bearish structure. And that mattered, because after that, roughly 21 days later, the market started a new bullish move. And that's probably what I like most about looking back at old trades. You get to see the part you couldn't possibly know when you entered. At the time, I didn't know whether this was going to become a reversal, a range, or just another temporary move against the trend. I only knew what was in front of me. The failed breakout, the reaction, the 5-wave move, the zone, and a risk to reward that I was comfortable taking. The market eventually told me the rest, and for this trade, that was enough.